This episode is brought to you by Newline by Fifth Third. Drive your fintech forward with the embedded finance platform designed for enterprise fintech and backed by a leading financial institution. Discover how Newline can transform your business at newline53.com. The Fintech Takes podcast is also brought to you by Paddle. Need more revenue, more growth, and more time? Over 5,000 digital businesses trust Paddle as their merchant of record, or MOR. Unlock more revenue, more growth, and more time. Get more at paddle.com. Hello, and welcome back to another special episode of Fintech Takes. This week I have a special guest episode. Alex DeMarco, founder and CEO of a company called MoneyStack, came on. And the reason that I got introduced to Alex is because he is focused on helping to solve the financial services challenges associated with gambling. We talk about the rise of gambling and sports betting, particularly in the wake of the Supreme Court's 2018 decision, which unlocked the ability for states to legalize mobile sports betting. We talk about the rise in prediction markets and the sort of blurring of lines between investments and wealth management and speculation and the impact that's having on consumers. And most importantly, we talk about the human side of this problem. Before we get there, though, I did also want to mention that the day after this podcast comes out, I will be moderating a panel at StableCon that my friend Nick Milanovic at This Week in Fintech is putting on. And he very generously invited me to moderate a panel on the shifting regulatory sands of stablecoins, which could not be a hotter topic given that the U.S. Senate is just right now at the finish line of finalizing legislation to create a regulatory structure for stablecoins in the U.S. So if you're in New York, if you will be at StableCon, please send me a message. We'll try to find some time to grab a quick coffee or at least say hello. And in the meantime, I can't wait to drop you into this episode featuring Alex DeMarco, founder and CEO of MoneyStack. Okay, well, Alex, welcome to the podcast.
Great to be here. Thank you, Alex. Thank you for the invitation to be here.
Absolutely. I am delighted to have you. It's funny that there's a set of podcast guests that I have on where our initial meeting is just like a, hey, you two should connect, you should chat. And then I walk away from that initial conversation going like, I have to have this person come on the podcast and we have to like basically redo our initial conversation for a larger audience. And I think you and there were actually a few different folks who were trying to connect us over the last couple of months. And we finally got a chance to talk. And I'm delighted to have you back to record a version of our first conversation. Before we get into that, though, I think it'd be great if you could give a little bit of background on yourself and on MoneyStack, because you guys are a little different than my typical guests who come on the podcast. So if you wouldn't mind doing that, that'd be great.
So my name is Alex DeMarco. I'm the founder and CEO of MoneyStack. I've been a software engineer for over 20 years. I was most recently a director of engineering at the New York Times. And this is my third startup. And, you know, with MoneyStack, I have firsthand experience of the problem of financial stress impacting mental health. And this is one of the reasons why I started the company originally as a financial education company. And through a number of pivots, we eventually got into the field of providing financial counseling as a platform, so software and services to help people recover from a gambling addiction. And, you know, we'll cover that later. But, you know, my background is mostly in tech, but since launching the business have surrounded myself with an amazing team of advisors and people who are experts in this area to help us just scale and do what we do across the country.
Fantastic. So I want to talk about that because I think that's how we initially got connected. I have a very simple theory, just broadly speaking, which is that there is a normal level of advertising that B2C companies trying to reach consumers in any industry can afford to do and get a good return. And that's kind of the water level. And then whenever I see an industry start to advertise above that water level, my baseline assumption is that they are generating an unsustainable return and that the end customer is in some way being taken advantage of. Now, Alex, just for background, I formed this theory back in 2021, the halcyon days of 2021, when I went to a restaurant in Bozeman, Montana, where I live, and I got a fortune cookie after my meal. And I opened the cookie, looked at the fortune, and it said, "Today is a good day to take risks," which is kind of an unusual fortune. And so I looked on the back, and it turned out to be sponsored by FTX, the crypto company. And I was like, how does FTX have this much money to be advertising on fortunes in fortune cookies in Bozeman, Montana? And of course, it turned out that FTX did not actually have that amount of money. And the whole thing sort of unraveled. That was my first clue that something strange was going on with FTX. The reason I tell this story is I have noticed, and I don't think I'm alone in this, that gambling and mobile sports betting specifically has really breached this "how do they have so much money" advertising level that I have in my head. I see ads for sports betting literally everywhere. So let's start here. Alex, how much money are these gaming companies making right now?
Well, first off, let me say gambling, sportsbook operators basically do have that money. And I can see a day where they are advertising in fortune cookies like that if they can figure out how to get that, warning message at the bottom, call 1-800-GAMBLER if you got a problem. They can figure out the font to get it on a fortune cookie. I can see that happening.
Oh my gosh.
So last year they set a new record. I think it was something close to 72 billion in total revenue across the country. And what's most interesting about that is just the rapid growth in online sports betting and iGaming, the next wave, roulette, table games, and so on in your pocket, on your phone.
Mobile sports betting, iGaming, I mean, really, and correct me if I'm getting any of this wrong, but a lot of this sort of stems from regulatory changes that have happened over the last, 7 years? We go back to maybe 2018 and the Supreme Court decision as kind of a watershed moment here. And, I think that the thing that I want to help people understand, and I don't know that people who don't gamble a lot or who have a gambling problem necessarily, I don't know if they necessarily appreciate like what this looks like. In fact, I've written a number of pieces about this in my newsletter recently, and some of the pushback I get from folks is like, isn't sports betting just sort of harmless fun, right? That you do occasionally from time to time. I think a lot of people who give me this feedback maybe do a little sports betting on the side themselves, which is absolutely fine. And I think what this perspective misses, and what I'm curious to get your help understanding, is the impact, again, of highly accessible mobile gaming, right? So this gaming in our pockets, and the impact that has on a small percentage of folks who gamble frequently and who experience significant harm from gambling. So if you sort of look across the population of people who gamble and sort of focus on that segment, I think that's where a lot of the problematic elements come in. And I think what people might not know, unless you've studied this industry, is that gaming companies actually go out of their way to target those individuals specifically. So I'm wondering if you can kind of double click into gaming companies' business models, how they make money, and specifically the role of these like VIP or loyalty programs that they have as a part of that model.
Yeah, sure. So you're right. I mean, for most people who gamble, it's an occasional thing and it doesn't cause harm. But unfortunately, just with more access to, sports betting, apps on your phone, what we saw through COVID is more disposable income,
right?
The checks coming in and just more time on your hands. So time and money. This led to a tremendous increase with more states being able to legalize gambling in their states, after New Jersey won their case in 2018 before the Supreme Court and the ban was struck down. Every state could legalize sports betting, and it generated a whole lot of tax revenue for the state.
Right.
That was one of the primary drivers. But on the flip side of that, I mean, they knew that there were going to be people who were going to experience harm from gambling, so they wrote into the law in many of these states that they would set aside a percentage of gambling tax revenue to support people experiencing harm. So behavioral health treatment, awareness campaigns, education, outreach, and so on. So anyway, that's sort of covering a little bit of what happened after 2018. And what we're seeing is, again, going back to greater access, very sort of engaging experiences in the apps. and more advertising, we're seeing people start gambling maybe as a fun thing to do with friends. It goes from being an occasional experience to something that you're always doing or you're thinking about more and more. And then it can progress and become a problem and eventually turn into a disorder where you're really experiencing a great deal of harm on the financial side, as well as emotionally, your relationships at home, preoccupation with gambling or the outcome of the next bet can impact your work. There's a whole lot of this that we can get into. And the thing about New Jersey, you mentioned New Jersey. I mean, they won the case in 2018. They were one of the first to bring online sports betting to market. And what we saw was at 23, they did a prevalence study looking at how many people are experiencing moderate to severe issues with their gambling behavior. And the number came back, I think it was around 6%. And that's more than double the rest of the country in most places. So in New Jersey, looking at the fact that they're further ahead, it's kind of a preview into the future of where things are going here across the country. So there's work that the New Jersey Governor's Task Force just recently reported on new programs and new initiatives to try to get ahead of this. But not all the states are doing that just yet.
Right. So to kind of reframe what you just said, we're sort of still in the midst of this rolling out across the country, right? Because 2018 sort of unlocked the ability for states to legalize mobile sports betting on kind of a state-by-state basis. I think there's still, 11 states where it's not legal right now. And so we're sort of in the process of doing that. There's lots of bills actually being debated at a state level right now. Obviously, the gaming industry is advocating for the legalization of gaming in more and more states. There's also prediction markets, which is its own whole ball of wax that sort of sips outside of what a lot of the existing regulations cover and might sort of unlock different gambling opportunities at a national level rather than a state level. But to your point, I think the broadest sort of most important point here is New Jersey is in some ways kind of a vision of the future, right? Because they were very early relative to other states in legalizing mobile sports betting, and the sort of infrastructure descending on New Jersey that hasn't necessarily fully spread out across the rest of the country yet, but it's not unreasonable to expect that it might. And so rates of, as you were saying, problematic gambling might go up. And I want to circle back to a point that I raised earlier, but I just want you to double click into these apps and these services. They're not passive in terms of just making gambling available to everybody, right? I think part of the challenge with mobile sports betting in particular is they can actually be much more interactive and data-driven than having to walk into a physical casino. They can send you notifications. They can have a VIP or loyalty team reach out to you to try to encourage you to get back into gambling or to game more. And I imagine, and what I've heard is that a lot of that targeting focuses on these more vulnerable populations who might already have sort of problematic experiences with gambling. Can you elaborate on that a little bit?
Sure. Yeah. So the basic idea is the more you bet and the greater volume or the greater amounts that you bet, the more money the casinos and sportsbook operators can make. I mean, it's just how their business model works. They're either acting as an intermediary and getting a margin acting as the intermediary, or they're acting as the house and the odds are in their favor. So at the end of the day, you might win once in a while, but when you're betting against the house, you're eventually going to lose and the house is going to make money. The point is getting people to bet more and more often and greater amounts. They have ways of nudging people to do that. So some of those ways are automated. You might have some AI behind the scenes or some technology that's kind of monitoring your behavior and suggesting or providing you with an offer just at the right moment to get you back in to the action.
And the moment might be something like, this is right before I go to bed, but I check my phone right before I go to bed. Like the data that they can sort of surmise about you as an individual and when to target those notifications is pretty precise.
It's quite sophisticated, yeah. And it gets better every day. I mean, This is a whole other level. Like they
Right.
know everything about the money coming in, where it's going, how it's being spent, what games you play, when you play, what do you like, your favorite teams, maybe other people in your circle who you're betting with to create that social experience. They've got so much data. It's a whole other level. And they're tracking everything. So, we'll get into tax reporting and all that later when it comes to harm. But yeah, a lot of people don't know that your winnings are actually reported to the IRS.
Right.
So back to the nudges. So the other part of, the nudging is, some of it is automated, like I said, but you have human VIP hosts that, you used to see in a bricks and mortar casino. They're acting online and building relationships with you online to bring you back to play, back into the action. And some of the tactics that they use, well, they've gone overboard, according to some of the lawsuits that have been filed recently. So these tactics have caused harm to individuals, financial, emotional harm that has become quite devastating to these families. So
well, it's funny you say this. It's not funny. It's horrible, but like it's interesting that this pattern comes up because a lot of the things you're describing we see in other areas of financial services, right? I mean, I'm on a crusade to try to convince people working in financial services that gambling is a financial services problem that we need to take more responsibility over helping to address. But the things you're describing should sound familiar to folks who are listening, right? Because overdraft fees are exactly the same way you described it. Most banks and credit unions that make a lot of money off of overdraft fees make most of their profit off a very small number of users who use overdraft in a problematic way, right? The profit business models of companies like Robinhood, for example, are entirely based on volume and keeping you sort of engaged and interacting in the app. And the more sort of volatility and volume they encourage, the more profit they make, the more money they make. So a lot of what you're describing, even though the surface level is different, should sound very familiar to people working in financial services. And just to sort of put a fine point on this idea of like you winning versus the house winning, obviously in any gaming scenario, they want you to feel as if your odds of winning are very high. I found this stat, which I didn't share with you before when we were prepping for this, but I thought it was pretty interesting. According to someone who reports on the major sports books, FanDuel's structural sports betting hold, meaning the amount of money that they retain after paying out winners, is now about 14%. And they say structural in the sense that this persists over time and it's not just due to kind of the random fluctuations of the odds. Before the spread of online sports betting, following the federal wagering ban repeal in 2018 that we've been referencing, Nevada's historic sports betting hold for in-person sports betting that you did in the casinos was about 5.6%. So think about the amount of money that these new mobile sportsbook operators are making relative to traditional sportsbooks in Nevada. It's practically 3 times as much. And this gets into, again, not only some of these behavioral nudges and things that we were talking about, but also just, I think, the evolution of sports betting as sort of a practice, right? Like you hear mobile sportsbook operators talk in glowing terms about parlays as just one example. Those are very bad bets, right? They're very compelling and they're very sort of interesting and easy to understand and they're fun to bet. But you can elaborate on this a ton, I'm sure, because you've worked with consumers who've gotten sucked in by this stuff. Parlays are a terrible bet.
Yeah. I mean, it used to be, traditional gambling in Las Vegas or, the way it was, you used to bet on the outcome of a game. Your team would win or lose and, you'd make money or you wouldn't. But now you can bet on any moment in a game. Are the Canadians, I'm from Montreal originally, are they going to score on the power play, the hockey game? Or, is he going to sink this free throw? So you can bet on any moment. You can bet small amounts, large amounts. You can combine them into a parlay, like you're saying. So the probability of winning when you combine all of these outcomes together becomes very, very low. But it's a very exciting potential win if they all happen. And the thing is, there's this distortion, this mental distortion where players think they have the inside scoop. They have a system. They know what's going on. Like, it's not like it's not fixed odds. They think they know something about the game and they've played maybe in the past and they know what's going to happen next. So all of this plays into giving someone a belief that they can win this time, even though over the long term, just negative expected value, it's probably not going to result in a sustainable long-term source of income for you. Too many people believe today that gambling is a great side gig, and that is not the case. Anyway.
Right. Statistically, yeah. Like, I mean, again, it's just logical, right? Like, these companies wouldn't be making billions and billions of dollars if it was, in fact, a really good gig for the vast majority of people. And I think the only other point to add to that, and this is something that happens in sort of the more IRL version of gambling from the past as well. It's discouraging to people who actually are good at it, right? And so, like, you also hear news stories a lot about professional gamblers who try to use these platforms. And when they actually find positive expected value, when they find mispriced bets, they actually can make some money. But there's lots of stories of these mobile gaming operators restricting their access to these apps or being slow in paying out their winnings. So essentially, they can sort out people who are bad at using these products, meaning the ones who are profitable, versus the ones who are good, which is a very small percentage of people. And they will adjust the experiences dynamically of those two groups to discourage one and encourage the other, again, sort of driving towards the most profitable outcome.
Right. And that's how you get the 14% that you talked about, by having the good players go somewhere else.
Right. Exactly. So I think that's so important. So let's just sort of put some scoping on this a little bit. You mentioned New Jersey and the rate of sort of gamblers who sort of get into problematic situations. Can you put sort of a number on this for the whole country? Like, how many people in the US have what we might consider to be a gambling problem?
Yeah, so the National Council on Problem Gambling estimates that it's around 10 million people who have a moderate to severe gambling problem.
I'm sure. Yeah, well, and to the point you made earlier about New Jersey being kind of a test case for the whole country, I could see it going up dramatically, right?
Yeah.
So let's talk about the problems associated with this, right? And we've sort of hinted at some of them, but I want to get into it in more detail. And I apologize for listeners. This is where things are going to get a little bit dark, but I think it's really important to look this problem in the face. So let's work backwards from the less severe consequences to the more severe consequences. And I use less in quotation marks here because it's still horrifically problematic, but solely on a financial level, can you help us understand what the impacts are of gambling, and particularly problematic gambling, on consumers?
Sure. I guess the first thing, is the gambling debt, right? So the gambling debt that one accumulates while gambling, and as gambling progresses from an occasional activity and it's fun to becoming more of a problem, and then eventually becoming a disorder. That gambling debt piles up in many cases. And what we see is, on average, the typical person experiencing harm from gambling, someone with a gambling problem, will have about 9 to 10 times the debt of an average consumer on credit cards, on personal loans, sometimes borrowing from friends and family as well. Recently, there's been some research that has shown that I can't remember exactly what state this was in, but they saw a 28% increase in bankruptcies after sports betting went live. They saw a 14% decline in household investments. So thinking about using disposable income to fund gambling activity, that's actually not what's happening. People are pulling money that would normally have gone to savings or retirement accounts, are pulling money from there to fund their gambling behavior. So a 13% decline in household investments. And, a lot of this financial harm happens in secret. So, you may have a partner in the household or a parent, who might be, providing funds for tuition, and once it is discovered, if it is discovered, it's a tremendous shock on the relationship. How did this happen? And that's what leads into, the darker side of where this goes. Like, the finances underlying this is kind of the fuel for the behavior, but that translates into tremendous devastation in households and, between families or within families, and can lead to even greater harm. I mean, this leads to gambling addiction having the highest suicide rate of any addiction. There's been reports of more domestic violence stemming from gambling, child abuse, people, neglecting their children as they gamble. And further, gambling motivated crime. One of our clients is the Gambling Treatment Diversion Court in Las Vegas, so Clark County, Las Vegas. So we see people who are convicted of a gambling motivated crime, instead of being incarcerated, they go through a probation program, and we provide our financial counseling to support them through treatment as part of their overall program, usually over 3 years. So anyway, there's a lot more. It's not just about the financial harm; it's also what stems from that financial devastation and the shock once it's revealed, the shock to families once it's revealed.
Looking to grow your fintech with scalable API-enabled payments? Newline by Fifth Third empowers enterprise companies to accept and process payments seamlessly. Effortlessly launch and scale payment, card, and deposit products directly with Fifth Third Bank. Learn more at newline53.com. Do you need more? More time? More revenue? More growth? Software companies are born global, but the complexity of selling worldwide can be overwhelming. Managing payments, sales tax, fraud, refunds, these things slow you down, but getting them right is essential. That's why over 5,000 digital businesses choose Paddle as their merchant of record, or MOR. More. Complete sales tax compliance globally, multi-currency payments, fraud protection, billing support, all taken care of. With Paddle's MOR model, you get more. More time, more revenue, more growth. Learn more at paddle.com. Yeah, I'm glad you mentioned that, because I think that's one of the things that we don't always appreciate in financial services is this idea that, money is in a lot of ways the fuel, as you described it, right? But a lot of times it's really more fundamentally about relationships between people. And, the challenge obviously with gambling, I think, is that it really, especially as it's become more prevalent and it's sort of available to all of us in our pockets all the time, it really has illustrated that there are these sort of fracture points between relationships between people. And those are in families, between friends, between parents and their children, between spouses or significant others. And it does lead to, as you described, a lot of those darker problems, right? Crime, suicide, mental health challenges, like a number of things that are really, really bad. I remember seeing a study that said that when they studied the rise of mobile sports betting and the impact it had on domestic partner violence, and they actually saw a spike in that behavior relative to what they would have expected based on the NFL home team losing in an upset, right? So it paints a pretty clear picture of, what happens in a lot of cases when not only is that shame revealed or some of those other things you're describing, but just the elevated emotion around the outcomes of a lot of these things, right? One of the things we talk about in financial services a lot is this idea that it's actually sort of a service or a benefit of your broker or of your wealth management provider to not answer your call or to not allow you to check your brokerage account on certain days, right? If the market goes down, the best thing you can do both for your financial services and for your mental health and for the well-being of your family is to just not be too connected to this. But I think the problem with sports betting, particularly when it's on a mobile phone, is that you're just hyper connected to the outcome at all times. And then you're riding that emotional roller coaster up and down. I'm curious, obviously, as with anything, the burdens of gambling and problematic gambling, they don't fall equally on everybody. I imagine there are certain groups that struggle with this more than others. Can you give us kind of a bit of a demographic breakdown on where the problems tend to fall the heaviest?
Sure. Yeah. So there's research that shows that someone with a gambling problem can impact at least 6 other people around them. So close family members, friends, coworkers as well. So where we're seeing groups that have a higher risk of experiencing harm from gambling, so military personnel. So this idea of hurrying up and hurry up and wait, right? A lot of military bases outside of the U.S. might have slot machines or the ability to gamble, while you're waiting, that can develop into problem gambling behavior. Youth who haven't, in particular, younger than 24, 25 years old, where they might not have fully understood how to manage risk and developed risk management capabilities. So at great risk as well. And sometimes we see this in video games where you're starting to see gambling mechanics built into video games that can sort of, and that virtual currency kind of training young people to kind of place wagers with something of value, like within the game for an uncertain outcome. And this easily translates into gambling behavior. The transition is seamless once they become of age and are able to place bets. Yeah, the typical idea of someone with a gambling problem, and if you've ever heard of a Gamblers Anonymous, meaning older white males, that is not the gambler of today, of 2025. It can impact anyone at any income level, and looking at each of these different populations, there's slight differences in what type of gambling and how they gamble and when they gamble. And what types of games they play, but they're all impacted in some way by this gambling behavior. And going back to the point before about access, so time and money, so access to time, or having more time and having access to money, and your mobile phone giving you access to the gambling venues. It's just a perfect storm of enablers for an escalation of the problem.
Yeah, that makes sense. I mean, this will make me sound like a million years old, but I remember when I was a kid, I was just bored a lot. Do you remember those days when you're just like sitting around not doing anything and you're just bored out of your mind? And like the idea that mobile phones with dangerous things on them can fill in just all the times randomly that you're bored and just have a little bit of time. That I think is a really interesting illustration of not only how like gambling has changed, but just how like life in general has changed, right? Like things fill in those gaps thanks to these devices that we have that they just didn't used to. And I think the impact of that on people is really important. I'm wondering if you can help us put a little bit of a human face on some of these stories, because we've been talking sort of in the aggregate at a statistics level. But I mean, you guys do financial advising and counseling and help with individuals who are impacted. Can you give us some obviously anonymized sort of examples of the impact that problematic gambling has on people, on their families?
Yeah, absolutely. So I guess the first thing I'll say is there was a movie that came out in the 80s called Owning Mahoney, starring Philip Seymour Hoffman. It's the story of a bank manager who had a gambling problem, and it started as an occasional thing and eventually became a situation where he started gambling with his clients' money, and it escalated. It became a $10 million, like he had spent $10 million. And, this is based on a true story. He was gambling with client money and he wasn't caught until very late stage. Anyway, there's this scene in the movie where his girlfriend confronts him and says, you have a gambling problem and you should really talk to somebody. I've been reading about, help you can access. And he's like, I don't have a gambling problem. I have a financial problem. Right. So, the argument continued and things got worse in the movie from that moment forward. But the point is, and the reason I'm telling you this is, number one, if you want to sort of see like that change from occasional gambler to problem gambler to someone who's really in trouble and, they're chasing losses, trying to get that big win that's going to get them out of trouble. And then that turns into, gambling motivated crime and it escalates to a whole new level. And how it impacts families. Like that movie just tells the story. It's the textbook story.
Yeah.
And, we've worked with about 600 families since we've launched our service at the beginning of January of last year. And that's that storyline and that case is maybe half of them. We're also seeing parents calling us, seeking help and support services for their college-aged or young adult children. And every case is unique, and every case our financial counselors work with clients to figure out like where they are and come up with a recovery plan that doesn't involve gambling to get back on their feet and stabilize after that crisis. But there's a couple of stories, that kind of further sort of show the connection between feelings and finances here. So we had one couple, they were engaged to be married, and they decided they were going to get a credit card, a 0% interest credit card 18 months to pay for all their wedding expenses.
Mm-hmm.
And the idea was, after the wedding, they may get some gifts that would pay off a lot of that debt.
Mm-hmm.
So it turns out he used that credit card to gamble, to fuel his gambling behavior in secret without her knowing. Mm-hmm. So when this came to light, they sought treatment, or they started working with a behavioral health professional, and she brought us into the picture to work with them. Mm-hmm. And it became clear to us that it really wasn't about the interest rates or the balances on the other cards at all. Mm-hmm. Mm-hmm. This credit card with this 0% interest rate, regardless of the balance, or the interest rate, we had to prioritize that, paying off that debt above everything else because of what it symbolized. He had to commit and build a budget and, get that second job to pay off that debt to show her that he was trustworthy. And he wanted to earn her trust and rebuild their relationship. And that budget and debt repayment plan and that second job, like that was evidence and, trust but verify. This was the evidence to support what the promise that he had made to her. So the point here is, even though we do financial counseling to help people get back on their feet, it's not about the dollars and cents on the spreadsheet. It's about what they mean and what they symbolize for that relationship, and to help people rebuild trust and rebuild their lives. And that's actually what motivates them to change behavior. It's really, really hard to struggle through and stop gambling. And what motivates people to change and put in the work is just the need to rebuild trust and win back the relationships with people that matter around them.
That's fascinating. Yeah, I mean, I'm glad you mentioned that example, because it does remind me of a thing that comes up a lot in financial services. And when we talk about financial health, where there's this idea that there's sort of an optimal, quote unquote, way to restructure your finances or to get out of debt or to do whatever. But a lot of times the straightest path through is not the right path through, because the money and the different obligations that have sort of been created, they mean different things to the relationship, to the individual. And so that is a really interesting example of sort of, I guess, the complication in rebuilding trust and rebuilding relationships when something like this happens. I want to wrap up on a couple of items. First, just real quickly, when you look out at the sort of landscape of gambling broadly, right? And we've been talking a lot about mobile sports betting, because I think that's kind of the tip of the spear right now. I'm curious what other things you sort of see on the horizon that might sort of change the industry or change the sort of market in a way that will have some downstream implications. The two that I've been kind of thinking about that I'd love to get your reaction to, one is obviously the sort of continued push to move beyond sports betting to like iGaming more broadly, right? So this idea that, essentially we can take everything that used to exist in a Las Vegas casino and put it on your phone. Sports betting, maybe in some cases went first, but there's no reason, I guess, theoretically you can't put, slots and roulette and all manner of other gaming activities with real financial stakes on your phone. So there's a push there, I think. And then the other one I'm curious about, and this one is actually particularly tricky because of sort of the regulatory mechanics and what might sort of be the downstream implications, but prediction markets getting into other types of event contracts and sort of merging in some cases with sportsbook operators, or we've seen Robinhood partner with Kalshi, which is a big prediction market. Can you kind of speak to those areas and just when you look at the future, what the impact might be? Sure.
Yeah. So, in sports betting, with this ability to, bet within a game on every play, the rapid, the pace of wagering and the dopamine hit that you get. People would always say it's so much like slot machines, the speed of betting. It kind of develops that addiction. You want more of that more frequently, and you need to bet a higher amount to get the same level of excitement. So now, I mean, with slot machines on your phone, it's even, for people who don't like sports or aren't going to bet on sports, now they can, use that and not have to drive anywhere, just use it at any time of day. So the iGaming and taking these table games and other, forms of gambling. There's more and more states that are legalizing that. And the thing about legalizing it and regulating it at the state level is, it generates tax revenue for the state, but at the same time, they set a percentage of that tax revenue aside for the safety net and to help people who experience harm. And like I said before, create awareness programs and just help people understand some of the risks.
And that's what funds a lot of like interventions and things that exist, including some of the work that you guys do, right?
Absolutely, yeah. We're funded either directly through the state, from the state, to do what we do, or through an intermediary like a nonprofit council that runs problem gambling programs in the state. So that's what funds the service that we do or that we provide. And the thing is, like, when you look at event contracts and regulating this at the federal level, but these are futures contracts, right? As investments, normal outside of sports betting, and like these would be investments, and you don't have to talk about a safety net. But now, when you think about it as a sporting event, an election, wagering some amount of money on an uncertain outcome, it's gambling, and there is no talk of building a safety net about awareness and prevention of risks. There's none of that. One organization saying, yes, let's allow this at the federal level means, they can operate this platform nationwide instantly. So you're starting to see attorneys general from different states, challenging this. And I think there's 5 of them that put a class action lawsuit together to try to prevent this from happening. At a minimum, there needs to be some discussion of, like, how do we prevent harm here? And how do we think about, the retail investor who may get pulled in without knowing the risks, retail investor, gambler.
The line between those two is so blurred, right? I think you put your finger right on it, right? Which is that I was having a conversation with someone, and they were saying that they today currently invest in tech stocks, private tech stocks, and meme coins, but they were diversifying into sports betting. And I was like, I think I had a stroke and I lost consciousness. But when I woke up, I was trying to sort of puzzle out what that statement meant. And I think it kind of hits on the exact point you're making, which is when we blur the lines between these activities and we use the wrong language to describe the wrong thing, we start getting people thinking that what they're doing is not the thing they're actually doing. Nor from a regulatory perspective, oh, no, it's not sports betting, it's event contracts, right? Well, if you offer event contracts on March Madness, or you offer event contracts on the Super Bowl, or you offer event contracts on the presidential election, or my favorite example from Kalshi is if you offer an event contract on will Mark Zuckerberg get divorced in 2025, that's a sports bet functionally, right? Even if it's not sports, it's some version of that same thing. But to your point, as much as I maybe am not a fan of states diving deeply into legalizing sports betting, at least when it's done on a state-by-state level, there is sort of a consideration of harm, the amount of money that will go towards helping to address potential harms, the benefit of bringing money in for tax revenue for other purposes. It's part of a balanced calculation. This prediction market surge seems like really an end run around that whole process.
Right. Yeah. And this is dangerous. It's not in the public's interest to allow this to go forward. And I don't think the CFTC wants to be in the business of regulating sports betting and thinking about all these problems. They should let the states do it. They're set up to do this,
Yeah, no, absolutely. I completely agree with that. So let's wrap up by talking about solutions. We've been talking a lot about problems, rightfully so, because I think this is just one of these areas where we are going to see more and more problems crop up here. But I also know, and you do this work on a daily basis, that there are ways to help. And one of the things that, I think that you highlighted to me when we were first talking is that one of the key problems, and this is backed up by a lot of the research, is that a significant majority of individuals who struggle with gambling problems don't seek help. And so I think maybe when we start talking about solutions, we should first start talking about the psychology behind why that is, and if there's anything we can do to change that.
Yeah. So just going back to that line from that movie, Owning Mahoney.
Yeah. I'm gonna rent this movie, by the way. I'm gonna watch this.
So I don't have a gambling problem. I have a financial problem, right?
Right.
So that's 60% of calls to helplines in some states it's even more than that. The calls to the helplines are precipitated by a financial event, like just lost a ton of money. I now have to tell my family about this. So when they call the helpline right now, the people who answer, like, they're amazing. They're wonderful at what they do on the behavioral health side. But the individual who's calling wants to talk about finances.
Right.
And that's not the training that they have. So the idea is, like, let's bring that financial counseling and let's create a mechanism for people to talk about money earlier on, address that concern, give them some hope that there is a way to, to get out of that financial hole that they're in without continuing to gamble and without declaring bankruptcy. There's usually other options. So using finances as a gateway into support services to help you recover, and maybe introducing someone to behavioral health treatment professionals or Gamblers Anonymous group sessions, like a financial conversation early on can actually sort of engage with someone where they are and help bring them into the support services. So this is actually a model that we're testing in New York. We're bringing it to other states as well. So, all the stigma, the shame, admitting that I have a gambling problem, I have nobody wants to do that and call a number. Nobody, most younger people don't want to pick up the phone and call anyone today. So, like, we've got to meet people where they are, have that conversation that engages them with the question that they have in the moment, and then start introducing them to these other services that might be available. So that's one. Two is financial education and more awareness of the risks around gambling, and debunking some of the myths, like I was saying before, like, gambling is not a great side gig to earn a living, right?
Not a side hustle. Don't think
not
of
a
it
side
that way.
hustle. You're eventually, the odds are against you. So younger and younger individuals are just being exposed to those gambling mechanics in games and video games. So, this is one of the outcomes from the New Jersey task force, the governor's task force. One of their recommendations was to, in the financial literacy education in schools, like, let's talk about gambling. Let's talk about, the risks of gambling. So educating younger and younger audiences so they can better understand how this all works. And just again, going back to the point about picking up the phone and calling a number. Yes, you can chat with the helpline staff as well, but you don't really know what's on the other end before you call. So if you do have a problem, like, it would be great to know a little bit more about what services are available before you actually call. So apps, there's a few apps on the market that are rolling out to create more awareness and give and reach people before it escalates into a severe problem where they need to push through the stigma and the shame and make the call. Like, just reach them earlier before they hit rock bottom. So there's a few apps out there that are emerging.
What you described makes a lot of sense, right? In terms of financial reasons oftentimes being the motivator rather than a recognition that I have a gambling problem. Obviously, like, confronting the shame of that admission is like a totally different level than, I can't make this loan payment next week. I need help with that. So sort of building graduated paths for people to get to where they need to go to makes a lot of sense. But I also think, the other thing that I'd love to get your quick take on before I let you go is, in the broader financial services ecosystem, and you touched on financial education and financial literacy as maybe one component of this, what else can we, and I'll speak for my audience in financial services, banks, fintech companies, what can we do, if anything, to help with some of these things? Obviously, being able to point customers towards resources that are available to them is one. Financial literacy and education is another. What other things are top of mind for you that if you could, like, wave a magic wand and go, I wish banks wouldn't do this, or I wish fintech companies would start doing this, what else can we help you with? Because I think we all have a responsibility to grab an oar and to try to help get the boat going in the right direction.
Yeah. So last week you wrote about Stripe using a novel AI method to look at financial transaction behavior and detect card testing. So that same technology applied to look for gambling addiction would be freaking awesome.
Yes.
Let's use that technology for problems like this. And, what does the intervention look like once you've detected, potential issues? Well, that's where, let's collaborate with behavioral health professionals. And there's a couple of initiatives that I can send you later that are kind of starting those conversations. But the point is, we know, by looking at financial behaviors, we know where there's a problem.
Yeah.
Let's surface this to behavioral health professionals and people to be able to intervene before clients hit rock bottom. This, helps the client, but at the same time, for the wealth management organizations, the financial services organizations, this idea of money not going into investments because it's going into gambling.
I keep trying to make this point.
Line.
No, you're exactly right. It's like they are gambling. Sportsbooks are taking money out of your pockets. If you're a bank or a company that's trying to help with savings, wealth management, lending, like any number of other productive uses for that money. To your earlier point, I just want to emphasize this. Consumers are not looking at this and going, oh, you know what? I want to spend more on sports betting this month, so I'm going to cancel my Netflix subscription. It's not coming out of that budget. It's coming out of a financial services, savings, wealth management, retirement. It's coming out of those buckets.
Right. Yeah, absolutely. It's an investment, retail investor, gambler.
Right.
So that, just using technology to in a novel way for a behavioral health use case, I think there's a lot that can be done there. And I know a few groups coming together to have those conversations, and I can tell you more. The other thing is just training wealth management and financial service professionals on what to look for, how to, ask questions, not necessarily, tell people what to do, but just ask questions to find out more. And then if there might be an issue, what resources are available, how do you direct people to those resources? So there's training that's available for financial professionals. One of the things we see, so wealth transfer, right? Wealth preservation. When we see, boomers transferring wealth to the next generation, when they have concerns about the next generation gambling, I mean, how do you talk to families about this? How do you set up guardrails for that next generation so they can live a good life when they receive an inheritance, but it's, managed in a controlled way so it doesn't trigger a relapse and so it doesn't evaporate instantly because of the addiction.
Great point. Yeah.
So, training wealth management professionals, financial professionals on how to handle these types of situations, how to set up estates, trusts, annuities, whatever the product is to set up those guardrails. There's really interesting conversations that need to be had to bridge the gap between financial services and gambling and sports betting.
Yeah, no, those are great examples. I'm glad you mentioned the Stripe one, because I think that is something that we don't do enough, right? And just to sort of put a little bit of meat on that bone, we're very good in financial services at collaborating to spot fraud, right? This is a bad guy attacking this bank. They just attacked that bank down the street. Let's sort of cooperate and share data and share resources and build common models to try to identify those people and keep them out of the perimeter. But I think, the thing we don't do nearly as well is we don't collaborate to identify sort of problematic first-party behavior on the part of our customers, right? And this has become much more of a topic lately in financial services relating to scams, right? Where it's the consumer authorizing something, but it's a scam, they're being tricked, something like that is happening. So we're starting to get better, I think, at identifying certain types of problematic behavior that show up in a bank account and show up in that transaction data that you can then sort of extrapolate and go, yeah, I think this is what's happening in this case. But to your point, there's a much broader set of problematic behaviors that have sort of a behavioral type or a behavioral pattern, I would imagine, that you could spot. And I almost wonder if we need some type of kind of maybe to complement the states in a way, but some sort of private market service that can work with customers who are getting into some of these situations, because the core point you make is the best possible one. This behavior, especially when it becomes problematic or it leads into this sort of path that we've been talking about, it is diverting the profitability of your customers in a direction that is bad for them and bad for you as a financial services provider. And so identifying the early moments when that might start to be happening and finding ways, behavioral science driven ways to intervene in those moments. This isn't like charity. I'm not asking for, you to like spend a lot of money to do something that's not in your interest. Like as a financial services provider, it seems like that is a kind of a no-brainer investment to make in the future profitability of your customers. Is that a fair way of thinking about it?
So yes, and that's actually what we're building. Like,
Good. I'm glad someone's building this.
Yeah. So like, the financial counseling, financial crisis care that we provide, with clients, like after, you're in a more stable place, like we want to build that fintech that will, keep people stable, provide that fintech support for long-term recovery.
That scaffolding. Yeah.
Yeah. So detecting what you're describing, detecting the potential for, maybe a relapse is occurring or could occur. What do you do with that knowledge? Like you need to deliver it in a way that's not going to trigger more harm or just upset someone. So they just turn off the whole feature. Yeah. So that's where a relationship with someone you trust, a financial counselor from our team or behavioral health professional, like that relationship that's been established is so important, that layer of trust and to deliver the messaging. And, this could be a wealth management professional at some point later in the
sure.
So the human component of all of this fintech is just, we can't leave that out. It's so important. And like I said, connecting the dots between feelings and finances to live a better life and support recovery after a crisis. Like this is what we're all about.
Yeah. Well, and to your point about leaving humans out of the loop and why that's not a good idea. I mean, the reason we know it's not a good idea is it's not what the sports books do either, right? They have human VIP staff who get humans involved. Like we know humans being a part of this loop is absolutely necessary, both in a good way and obviously we see this happen in a bad way as well. Alex, this has been great. We could do another hour on this whole topic easily, but I'll let you go because I know your time is valuable. Before I do want to mention, just in the interest of anyone who's listening who either may be struggling with gambling or knows someone who is, I'm sure you can rattle these right off the top of your head, but what are some resources that people who might be struggling with some of these challenges should know about?
Sure. Yeah. So the main resource is the 1-800-GAMBLER helpline. There's issues, picking up the phone and calling a number, but still, it's still the primary resource for anyone who needs help. Call that number, 1-800-GAMBLER. And it's not just for someone who may be struggling themselves, but it could be a family member. And the person who answers the phone on the other side will be able to direct them to additional resources, depending on their situation. Gamblers Anonymous is a peer support group. You can go to Gamblers Anonymous, Google it, and you'll see they have group meetings all over the country. Some are online, and you can join a group meeting and listen to stories of other people and how they're working through recovery with the support of others. GamAnon, so it's not Gamblers Anonymous, but GamAnon is for affected others. So family members who are seeking help can access help in a peer group format. And two other things to say. So NCPG, National Council on Problem Gambling, has a lot of resources listed there, state specific. You can go to their website. And lastly, there's more and more voices of recovery emerging on podcasts, Facebook groups. There's a lot of great stories out there being published. The All In Addicted Gamblers podcast. There's Broke Girl Society. There's a number of others. And the whole point of sharing stories like this is so that you're not alone. Like the secrecy, the shame, the guilt, you're not alone in coming forward and seeking help. Listen to these stories, hear how other people have changed their lives and recovered and rebuilt relationships. There's a lot more out there than there ever was before.
Awesome. Well, that is a great place to leave it. Alex DeMarco, thank you so much for coming on the podcast. We will have you back, and maybe we can get even deeper into some of the solutioning that we're starting to talk about at the end. Thank you, sir.
All right. Absolutely. Thank you, Alex. It was great.
Thank you for listening to this episode of Fintech Takes. Stay up to date with emerging companies and the latest fintech trends by subscribing wherever you get your podcasts. And if you love Fintech Takes, please tell a friend.